Hello everyone, welcome to Finance by Visha and Arpita. In today's video, we'll see single candlesticks pattern. So the first topic we'll cover in this video is the spinning top. So the first video for this candlesticks pattern has already been uploaded, so you can probably see that video and come to this video later. The spinning top is a very interesting candlestick. Unlike the Marabuzo, it doesn't give the trader a trading signal with specific entry or exit point. However, the spinning top gives out useful information concerning the current situation in the market. The trader can use this information to position himself in the market. The spinning top looks like the candlesticks shown here. So it looks something like this. So you can take a look at this candle and give your observation in the comment section. What do you observe in the structure of the candle? So two things that are quite prominent are the candle has a very small body. The upper and the lower shadow is utmost equal. So what do you think would be transpired during the day that lead to creation of a spinning top? On its face, the spinning top looks like a humble candle with a small real body, but in reality there were a few drastic events that took place during the day. So let us follow these events. Small real body. This indicates the open price and the close price are quite equal. For instance, the open could be 210 and close could be 213, or the open could be 210 or close could be 207. Both these situations lead to creation of a small body because a 3-point move on a 200 rupees stock is not much, because the open and the close price are near to one another. The color of the candle does not matter really. It could be blue or red candle. What really matter is that open price and the close price are near to one another. Now coming to the second event, the upper shadow. The upper shadow connects the real body to the high point of the day. If it is a red candle, the high and the open are connected. If it is a blue body, the high and close are connected. If you think about the real body in conjunction with the upper body ignoring the lower shadow, what do you think had happened? The presence of upper shadow tells us that the bull does not attempt to take the market higher. However, they are not really successful in their endeavor. If the bulls are truly successful, then the real body would have been a long blue candle and do not really a short candle. Hence, this can be treated as an attempt by the bulls to take the market higher, but they were not really successful at all. Now coming to the lower shadow connects the real body to the low point of the day. If it is a red candle, the low and the close are connected. If it is a blue candle, the low and the open are connected. What do you think had happened if you think about the real body in conjunction with the lower shadow ignoring the upper shadow? This is pretty much the same thing that happened with the bulls. The presence of the lower shadow tells us that the bears did not attempt to take the market lower. However, they were not really successful in their endeavor. If the bulls were truly successful, then the real body would have been long red candle and not really a short candle. Hence, the bear's attempt to take the market lower can be treated as an attempt, but they were not really successful. Now, think about spinning top as a whole along with its component, that is, real body, upper shadow, lower shadow. The bull made a futile attempt to take the market higher. The bull tried to take the market lower and did not work either. Neither the bulls and the bears could establish an influence on the market, as this is evident with the real small body. The spinning top are indicated basically indicative of the market where indecision and uncertainty prevails. If you look at a spinning top in isolation, it does not mean much. It just conveys indecision, as both bulls and bears were not able to influence the market. However, when you see the spinning top concerning the chart trend, it gives out a compelling message based on which you are you can position your stance in the market. So this is all about the spinning top. Now coming to the spinning top in a downward trend. So what is the spinning tops were to occur when the stock is in downtrend. In downtrend, the bears are in absolute control, as they manage to uh, grind the price lower. With the spinning top in the downtrend, the bears could be basically consolidating their position before resuming another bout of selling. The bulls have also attempted to arrest the price fall and have tried to hold on their position. Though not successful, if all they were successful, the market would have resulted in a blue candle and not really a spinning top. So what stance would you take considering that they were spinning top in a downtrend? The stance depends on what we expect going forward. Clearly, there are two foreseeable situations with the equal probability. Either they are another round of selling, or the market could reveal its direction and the prices could increase. Clearly, with no clarity on what is likely to happen, the trader need to prepare for both the situation, that is reversal and continuation. If the trader has been waiting for an opportunity to go back on the stock, probably this could be this opportunity to do so. However, to play safe, he could test the waters with only half the quantity. If the trader wants to buy 500 shares, he could preferably enter the trade with 250 shares and wait and watch the market. If the market reveals its direction and the prices start going up, the trader can average up buying again. If the prices reverse, the trader would most likely have bought the stocks at the lowest price. If the stock starts to fall, the trader can exit the market and book a loss. All basically, at least the loss is just on half of the quantity and not really on the entire quantity. Here is you can see the chart. So here's the chart which shows the downward, followed by a set of spinning tops. The stock railed post the occurrence of the spinning top. Here is another chart which shows the continuation of the downward trend after the occurrence of spinning tops. So think about the spinning tops as the calm before the storm. The storm could be in the form of a continuation or a reversal of the trend. In which way the price will eventually move in is not certain. However, what is certain is the movement itself. One need to be prepared for both the situations. Now coming to the spinning tops in an uptrend. So spinning top in an uptrend has a similar implication as the spinning top in a downtrend, except that we look at basically in a slightly different manner. So you can look at this chart, and what do you think? What could you infer from this chart? An obvious observation is that there is an uptrend in the market, which implies the bulls have been in absolute control over the last few trading sessions. However, with the occurrence of the recent spinning top, the situation is a bit tricky. So the bulls are not basically no longer in control. Spinning tops would have not been formed in the chart if they were. With the formation of spinning top, the bear have made an entry to the market. Through not successful, the emphasis is on the fact that bulls gave leeway to bears. Having observed the above, what does it actually mean? How do we position yourself in the market? The spinning top basically conveys indecision in the market. That is, neither the bull or the bears can influence the market. Placing the above fact in context and uptrend, we can conclude two things. The bulls could be considering their position before initiating another leg of the up move, or the bulls are fugated and may give way to bears. Hence, a correction could be around the corner. The chance of both these events taking place are equal, that is 50%. Having said that, what should you do? The chance of both events playing out are equal. How are you going to take a stance? Well, in such a situation, you could prepare for both the outcomes. Assume you could have bought the stocks before the rally started. This could be your chance to book some profit. However, you do not book profit on the entire quantity. Assume you own 500 stocks. You can use this opportunity to book profit on 50% of your holding, that is 250 shares. Two things can happen after you do this. The bears make an entry. When this happens, the market starts to slide down, and as you have booked 50% profit at a higher price and can now choose to book profit on the balance 50% as well, your net selling price will anyway be higher than the current market price. The bulls can make an entry. So it turns out that bulls were indeed taking a pause and the rally continues. at least you are not completely out of the market, as you still have balance 50% of your holding invested in the market. The stance you take helps you tackle both the outcomes. So here's the chart. That shows a uptrend, and after spinning top, the stock railed. By being invested 50%, you can continue to ride the rally. To sum up, the spinning top candle shows confusion and indecision in the market, with an equal probability of reversal or continuation. Until the situation becomes clear, the trader should be cautious and minimize their position size. Now, coming to the fourth point, the dojis. The doji are very similar to the spinning top, except that it does not have a real body. It means the open and the close price are equal. Doji provide crucial information about the market sentiments and is an important candlestick pattern. The classic definition of doji suggests that the open price could be equal to the close price, with virtually a non-existent real body. The upper and the lower wick can be of any length. However, keeping in mind the second rule, that is, be flexible, verify, quantify, even if there is a wafer thin body, the candle can be considered a doji. Obviously, the color of the candle does not matter in case of a wafer thin real body. What matters is the fact that open and close price are very close to each other. The doji has similar implication as the spinning top. Whatever we learn from the spinning tops applies to dojis as well. In fact, more often than not, the doji and spinning top appear in a cluster, indicating indecision in the market. Have a look at the chart here. So, when the dojis appear in a downtrend, indicating indecision in the market before the next big move. So here in another chart, the doji appears after a healthy uptrend, after the market reverses its decision and corrects. So the next time you see the spinning tops or doji individually or in a cluster, remember there is indecision in the market. The market could spin either way, and you need to build a stance that adopts to the accept basically the accepted movement in the market. You need to build a stance that adopts to the expected movement in the market. So this is all about doji. Now, coming to the last part of the video, the key takeaways. So the first key takeaway is a spinning top has a small real body. The upper and the lower shadow are almost equal in length. The color of the spinning top do not matter. What matters is the fact that open and close price are not close to each other. Spinning tops convey indecision in the market, with both bulls and bears being in equal control. Spinning top at the top end of the rally indicate that either the bulls are pausing before they can resume the uptrend further, or the bears are preparing to break the trend. In either case, the trader's stance has to be cautious. The trader intend to buy, he is better off buying only half the quantity and should wait for market to move in this direction. Spinning top at the bottom end of the rally indicate that either the bear are pausing before they can resume the downtrend further, or the bulls are preparing to break the trend and take the market higher. Either case, the trader stance has to be cautious. If the traders intend to buy, he is better off buying only half the quantity and he should wait for the market to move. Doji are very similar to spinning top. Doji also convey indecision in the market. By definition, dojis do not have a real body. However, in reality, if a wafer thin body appears, it is acceptable. A trader's stance based on doji is similar to the stance taken when a spinning top occurs. So this is the last key takeaway of this video. If you like it and gain a lot of knowledge, please subscribe to the channel, hit like to this video. Thanks for watching. Bye bye.